Are you ready for some intriguing forecasts for Tesla's first quarter profitability in 2023? Despite exceeding expectations and producing more than 440,000 vehicles, the question of whether Tesla will beat Q1 earnings expectations still lingers. We'll examine Tesla's stock price prediction chart, estimate their revenue earnings, and net income in this video. We'll also explore what this means for Tesla's stock price. So get comfortable, click the like button, and let's begin. By delivering nearly 423,000 vehicles in the first quarter of 2023, Tesla has surpassed expectations. They produced over 440,000 vehicles, which is only 1,000 more than the previous quarter, but this is due to the Model 3 being shut down for 2 weeks. If it weren't for that, production levels would have almost reached 470,000, which is outstanding. Even though this is 10,000 vehicles less than estimated, it's still an impressive feat. The next question is whether Tesla will surpass analysts' expectations in first quarter profits, which we'll predict in this video using the Tesla stock price prediction chart. The second row is allocated to FSD alone with a one-time payment of $15,000 for each quarter. By the end of this year, they will probably boost it to $17,000 depending on supply and demand. The first row displays car deliveries. I entered a conversion rate of 15, which indicates that 15 of the Tesla buyers will choose to pay the one-time FSD cost. The FSD profit margin for all quarters is 4 to 5%, and the average selling price for each vehicle in Q1 is $50,000, rising to $49,000 in Q2, $50,000 again in Q3, and $51,000 in Q4 due to the Cybertruck, which will cost upwards of $55,000 per vehicle. The credits are projected to be worth $400 million in the first quarter, dropping to $350 million, $300 million, and $250 million in the following quarters. Profits and operating margins per vehicle are also taken into account, with almost $4 billion in total revenue for energy in 2022 and almost $300 million in profits. I'm also including it here. In Q1, I'm projecting that they'll do about $1.5 billion in revenue, which will rise by $200 million per quarter until the end of Q4, when it will reach $2.2 billion. Estimated profits are 12 for each of the 4 quarters. That FX currency expense for 350, 350, 375, and 375 is something I'd like to add. We can acquire the correct stock price for the forthcoming quarters by using an appropriate PE, because converting yuan to US dollars is quite expensive and will increase the cost of the current quarter. Adding this to the previous 3 quarters will give us a full fiscal year. It's important to note that the share standing is being diluted by 1% every year, 4% every year, and 1% every quarter. Next, let's forecast Q1 sales and profitability. If you're prepared, we can include the 423,000 vehicle deliveries to Q1 to estimate revenue. Press the like button if we combine FSD revenue with energy revenue and their profits. The total vehicle revenue is above $21 billion with a 14% operating margin. Tesla's first quarter of 2023 revenue is over $24 billion in total. The quarterly EPS will be 1.13, while the street is anticipating 85 cents. The net income is $3.6 billion. Although they just announced more price cuts, the profit margin is still going to be higher than 9.7%, which is a good sign even in this strange economy where we're in a recession. Tesla is still crushing it as we wrap up Q1. I don't understand where they're getting 85 cents from. Even if we reduce the operating margin to 10, it's still not 85 cents, so I put it at 14 and Q2. It's time to start planning for the upcoming quarter. My forecasts for Q2 are rather conservative. I predict Tesla will deliver 444,000 vehicles at a 13% margin, which will generate revenue of almost $25 billion. But the lower operating margins mean that net income will be below $3 billion, translating to an EPS for the quarter of 1.12 cents and an EPS for the past 3 quarters of 4.40. While I think they might deliver closer to 480,000, I'm being cautious and projecting Tesla will deliver 465,000 vehicles in Q3. This will generate over $26.5 billion in revenue and just over $3.8 billion in net income. EPS for the current quarter will be 17 cents, while EPS for the entire year will be 4.52 cents. Advancing to Q4, although I believe that Tesla can do even more, I want to be cautious and safe in my prediction that they will deliver a staggering 490,000 vehicles. This will bring in almost $28.6 billion in revenue, with a net income of over $4.5 billion. The EPS for the quarter will be 1.26, and the total EPS for the year will be 4.62. While this isn't the greatest growth in earnings, with just a 16 to 18 increase year-over-year, growth in terms of vehicles delivered is about 39%. Now let's talk about what this means for Tesla stock price. Right now, the stock is trading between $180 and $190 per share, but it could go lower due to recent price cuts and market panic. However, assuming a P/E ratio of 50 for Q1, we could see a stock price of $201 per share. If they miss EPS expectations and the P/E drops to 45 or even 40, we could see a stock price of $161 or $121 per share respectively. If things go bearish and the P/E drops to 30, the stock price could go as low as $101 per share. On the other hand, if Tesla surprises the stock market with an EPS of 1.13, we could see the P/E rise back to up to 55 or even 60, although it's unlikely to go much higher in this current market environment. Overall, I'm going to stick with a conservative estimate of a 50 P/E ratio. As we move into Q2, we can see a stock price of Tesla is slightly lower than Q1, which can indicate negative news on the horizon. However, if we look at the P/E ratios, we can see that in Q1 it was around 161, while in Q2 it improved to 176. It appears that Tesla did not surpass the previous earnings from Q1, and the stock could potentially drop to $45 or $40, causing fear among investors. I'm going to keep the P/E at a base of 50 for Q2 to give us an average stock price of $226 per share. Moving on to Q3, I believe that the stock price will continue to improve, and I'll give it a P/E of 50, which should result in an average stock price of $226 per share. However, if you want to get bullish, you could expect up of 60 and a stock price of $280. When Q4 earnings are released between January 21 and April 20, 2024, I believe we will be in a bull market, and I anticipate that the stock price could reach a P/E of 60, resulting in a stock price of $277 per share. However, to be safe, I'll give it a P/E of 50, resulting in an average stock price of $231 per share. These predictions are subject to change, however, so don't take them as gospel. The realistic pricing ranges, in my opinion, are for the end of 2023. To diversify my investments, if the stock price falls below 200, I'll personally buy more shares, but if it rises beyond 300, I'll cease buying altogether. I think it's a good idea to diversify your investments, and since I'm saving for a house, I can't put all of my eggs in one basket right now. I think the recent decline in Tesla stock prices is a good time to buy. I have no idea what will happen in the near future, but I think Tesla stock will continue to increase over the long run. In 5 or 10 years, I might look back and regret not acquiring more shares when it was still below that 1 trillion mark. Of course, this is only my view, and I may be mistaken. However, I have faith in Elon Musk and the Tesla team because they are committed to achieving their ambitious goal of accelerating the world's transition to sustainable energy. For instance, they plan to build a gigafactory in Mexico for the new compact car, which will advance them to the next level. Then they'll build similar factories in other parts of the world, which will eventually lead to the world's largest production of electric vehicles. This video has come to an end. If you would like to support us, please subscribe to my channel. Thank you, and I'll see you in the next one. The stock is erratic and can swing back and forth like an elephant trunk, so it's important to do your own research and take all investment advice with a grain of salt.